Good morning, everyone. This is Dennis Sherrin and Tammy Busby from Avizo Group, and this morning we're going to spend some time talking to you about the Payment Protection Program, loan forgiveness in particular, for the part of the coronavirus relief program that's out there. We appreciate you joining us, and we hope you take something from this that helps you understand more about loan forgiveness, which is just like everything else with the coronavirus itself and with everything with the PPP program, as you'll hear us refer to this, is still in flux, still some changes, but there's a lot of good information that we can help you point you in the direction that you need to go to prepare to maximize the amount of this loan that gets forgiven. The rules are different from what the rules were to actually calculate the amount of the loan that you've applied for or that you have received. And so we're going to spend some time today providing you some guidance and information on that. And so I'll turn it over to Tammy and let her add anything she'd like to add there.
No, I think that what we really want to make sure that everybody understands is that we're going off guidance that's published today, April the 22nd. And things may change as they have been changing, not necessarily hourly anymore, but we've been probably on a daily basis now changing the way we calculate things.
Right. Yeah. It's not hourly anymore. It was hourly, literally, for several days, and there's still some guidance that we do expect with around the forgiveness aspect of these loans, and so that we're going to talk to you about things that have been published in the CARES Act and the interim final rulings and in frequently asked questions, to give you some idea of where we know it's going to go. We know it's going to focus on payroll. We're certain of that. They've been very clear about that because the whole idea of this act is about retaining your existing workforce or rehiring your workforce if you did furlough or lay them off. And so a lot of the amount of your loan has to be expended for that. And we're going to talk about that more as we go on.
75%.
Yeah, 75%. Let's just say you got to spend at least 75% of your loan on payroll cost. And we'll talk about what payroll cost means with respect to forgiveness as we talk about this. But 75% of the loan amount you get, let's say you got a $100,000 loan, that means at least $75,000 of that money has to be spent on employees. You could spend 100% of it, but don't spend less than 75% of it on payroll cost. That's absolutely critical in this, and because then we get into some issues about loan forgiveness, and ultimately what we want every one of you to be able to do is maximize the amount of your loan forgiven up to hopefully your whole loan, but it's not certain or guaranteed that your whole loan will be forgiven unless you follow these guidelines and understand everything that you have to follow, but also the cost that you can expend this money on.
Right. So the Paycheck Protection Program is forgivable loans intended to encourage employers to retain and rehire their employees. So this was not a let me keep you afloat in a sense of helping out the business. This was a let me make sure that the employees are taken care of. Part of it, and this is just my personal opinion, but I think part of it was to help the taxed unemployment systems. Mm-hmm. I know that in the state of Alabama, there have been a lot of issues with unemployment and people receiving their unemployment. So I think that this was probably a way to help that system and to make sure that employees were being paid during this time.
Right. Yeah, absolutely. I agree with that. I think we all know that basically the world shut down its economy, and the U.S. to a great extent, not completely, shut down a lot of its economy as well, and that affects all businesses, small, large, or in between, and so a lot of decisions were already being made to furlough employees or lay off employees, and this was a means by which to provide a source of cash and support to that system to help prop the economy up until we can attempt to restart it.
And one of the things that people have asked, and we'll get into this a little bit more, is can I wait and let my 8-week period start after I bring my employees back for me to reopen? And that was not the premise behind this program. This program was so even if your employees are not working, the government's going to help you pay them. So you only have until the date that your loan is funded to actually start paying the money out, and you have an 8-week period. So it's not, if we open back up in May, we'll say, that's already cut for the people that have been funded in the last week. That's already cut 2 to 3 weeks out of their 8-week period for repayment.
Right. Yeah. And talk about that a little bit more, because what we've got, company ABC applied for their loan, received their PPP loan, we got it approved, and let's say it was funded on April 15th.
Okay.
So that is the first day that they are within this period of the 8 weeks that we're talking about. So, and what that 8 weeks is a measurement period. They're going to look at what you spend on payroll and other costs during that period. So they would have to focus on making sure they're about, what their payroll costs are and what they're going to expend from April 15th until
June 10th.
June 10th.
June 9th. I'm sorry.
June
April
9th.
15th would have been on a Wednesday, so you have until June 9th, the Tuesday.
Right. And so it's clearly an 8-week period.
Correct.
And you can't wait until you finish your 8-week period to go back and look at your cost.
Correct.
Oh, well, you could.
But then you risk the problem of not being able to get total forgiveness.
Right.
Or to meet the other designations that they require, the 75%, the not dropping below 25% for any employee that made under $100,000 or for your full-time equivalents.
Right. Yeah.
So that needs to be looked at from preferably the day you apply for your loan, continue to the day that you got funding, continue through that 8-week period, and you need to be really looking at it that last week. Because what we really want everybody to do and what the government wants you to do is to have total forgiveness.
Absolutely. Yes. And so over that period of time, you've got to look at that. And so let's talk, you're going to change that. So just go back a little bit here. This is the basics of the program and who was eligible for it, just to kind of refresh everyone on that.
So you had to have under 500 employees to apply. The applications were made through banks, not directly through the SBA. So you went to the bank was actually the middleman for the SBA funding. So the bank then issued it to SBA, and the SBA then approved the loan and will fund back to the bank, and then the bank will deposit the money in your account. Applications opened on April the 3rd for businesses and sole proprietors, and it actually did not open until April the 10th for independent contractors and eligible self-employed individuals. Applications are due by June 30th, but as we all know, last week on Thursday, the money ran out. The original $349 billion ran out. So as of today's Wednesday, yesterday, $310 billion has been approved by the Senate. They're waiting on the House, who's supposed to vote tomorrow morning. And President Trump has said that he will sign it as soon as it is approved by the House. So that's another $310 billion that'll go into the program. However, what we've been told is that 310 will probably go quicker than the 349, simply because there are loans in the pipeline that did not make it to SBA because SBA shut their portal down. So there are loans that were already issued to the banks or submitted to the banks that the banks are waiting to submit to SBA. Now, I know based on conversations that I've seen that they're trying to limit some of the bigger companies. We've all heard of the Shake Shacks and the Ruth's Chris and those type of entities. They're trying to figure out ways to limit those, but I don't know that they're going to be able to do that. It was not in the Senate bill.
Right, yeah, the only thing that the Senate bill, I think, specifically allocated $60 billion of loan funds to community banks to provide, but that really didn't restrict who the community banks could loan it to.
Right, right.
Right.
And in reality, we've heard about those. Those have been highly publicized. However, in all reality, they met the bill. They fit the
Right.
criteria. So we can all sit here and debate whether they should have gotten it or shouldn't have gotten it, but they did fit the criteria that was necessary to apply. So, you know.
And on the other side of that, if we look in the state of Alabama, there were over 20,000 small businesses that did apply and receive funding.
Right.
And across the country, the number is huge.
Right.
The scale of small, we all know more than half of the U.S. workforce is employed by small business.
Right.
And to be able to meet that need across the country, I'm not even sure that $750 billion is enough money.
Right. And I forgot exactly, and I did not print it out. I apologize, but I think it was like the average loan's $120,000 or something like that.
I actually saw yesterday it's up to 206.
Okay, but still, we're talking less than $300,000. So
Sure.
when you hear about the really big ones, the $10 million and the $8 million loans, those are not the norm. The norm is $250,000, we'll say.
Right. Yeah. And as in our experience, we've seen loans, small loans that are 5-figure amounts of under $10,000 up to some loans that are in the millions.
Right. I think the smallest one I've seen, well, not the smallest one I've seen, but most of them are in the $8,000 to $9,000 range for small.
Yeah. And we're based on everything. We're glad that people are able to get those funds regardless, because it is going to help. There's some businesses that maybe right in the beginning of this, they're not maybe sensing or feeling the effects, but you're going to.
Right.
And the reality is we're all going to be affected by this somehow.
Yeah.
And so it's really key. So we talked about the 8-week period, and it's very key that we're in that. If you've gotten your loan funds, you're now in your 8-week period, and so we'll just emphasize that it's important that we kind of go through and understand what those things are. And so let's just jump right on into the next thing and talk about the split, the 75-25. This came out of the interim final ruling that was published over a week ago now, that specified that your loan, to qualify for loan forgiveness, your loan proceeds have to be used 75% for payroll costs and 25% for other costs. Can't emphasize that enough. And that, because that is what the purpose of this whole program was to keep people working, keep money in the economy, and not tax the unemployment system beyond where it's already taxed. And folks, it's terribly taxed right now, and so this is key on that.
And I can tell you, just from a personal friend that works for the state of Alabama, because of our low unemployment, they had started laying people off in that department or moving them to a different department. So now they're having to pull in people to work unemployment from other departments in the state that are not accustomed to working that realm.
Right. That work. So let's talk about the cost that are forgiveness. When you got your loan, we helped you with it. We gathered a lot of things that we call payroll costs, and we put those together. And based on those payroll costs, we averaged it out to what a monthly average was, and we multiplied it times 2.5, and that determined your maximum loan amount, basically. Right. And then that's from that, the information, the application submitted to the bank, and you go through the process. And if you got approved, you got approved for that loan amount. Well, now that we go to the other side of this, you've received your funds. They got they're in your bank account. You're in your 8-week period. What costs are costs that you can use these funds for? And I want to emphasize the word "use these funds for" because it's key. But go ahead.
Right. So we have the slide up right now is forgivable expenses, and all of those obviously are qualified expenses. What is not on this slide is interest for other loans incurred prior to 2/15/2020. the funds can be used for that purpose, but they are not forgivable. So, what we want is for everybody to have a forgivable loan and not have that 2-year loan to have to worry with. But if for some reason you still have money left over, you can use it for interest on loans prior to 2/15/2020 that are not mortgage debt. But that's the only thing that is allowable other than these 4 items that we have on the slide.
Right.
So the forgivable expenses are payroll costs and benefits. That's the qualified payroll costs that we used or whoever used in order to determine your loan amount. So that's gross payroll, retirement benefits, employer paid retirement benefits, employer paid group health benefits, and SUI, state SUI.
Unemployment cost.
So those count, and those have to make up 75% of your loan value. The other 25% can be used for mortgage debt interest, rent, and utilities that were all incurred or service began prior to 2/15/2020. And then we'll go to the next slide so that everybody can see that utilities include electricity, gas, water, I'm going to skip the next one for a minute, telephone and internet, and it also includes transportation. So what they've actually included in there is gas needed for transportation for business vehicles only.
Right, right. Not mileage expense that a company may reimburse you.
Correct, correct.
And then also one utility that's not listed there is wastewater or sewer.
True.
And then so that was not included, and there's no reference to it anywhere in any of the guidance. So when you're looking at your utility cost, you've got to just get your water cost, your gas costs, and your electric costs.
The other thing that has not, and I mean, like we said, we're doing this all as of April 22nd, so we may end up with more guidance on this, but the other thing that's not included is trash.
Right. Yep. Garbage is not in there either. And that's true.
So.
Absolutely. Oh, I just forgot. Go ahead.
So now comes we've got our money. What are we going to do? Our recommendation at Avizo Group is that you segregate those funds.
Absolutely.
What we have told pretty much everybody that we have helped calculate an application for, or that we've even just discussed over the phone, is make sure that you open a separate bank account or have a separate bank account set up for those funds to go into.
Yeah, this is a big thing. A lot of my career I've spent as an auditor of various businesses, but also city governments, local governments, and local governments get a lot of federal grants. And one of the most important factors is you have to segregate those grant funds so they're not commingled. In a way, what you've got here with this forgivable loan, potentially forgivable loan, is a grant. That's what it becomes if it's forgiven. It becomes a grant to you, and of course, there's some benefits in that this is not reported as gross taxable income. But you have to be able to track those costs that you spent this money on very specifically so that you can substantiate the forgiveness. And the risk that my concern is if you commingle your funds with other funds, there's going to be questions as to how you expended this money. If you have it in a separate bank account and you do a very good job of tracking the cost that you're incurring and then reimburse your operating account after the fact out of the loan proceeds account, you created a very clear trail so that if anyone ever questions that, you've got a very clear trail of what you spent the funds on. It substantiates your request for forgiveness. And to me, that's one of the most important things, particularly on any size loan. But particularly if you have some significant loan, because understand, if it's not forgiven, you got to pay it back, and you've got about 18 months after the 6-month deferment period to start making those payments. And so it could be a significant dollar amount that you have to make. And there are some other risks, and that you spend the money on things you shouldn't have spent them on. There are SBA rules and regulations with respect to that, and it can be fraud. And
they've been very clear in the guidance that's been issued that they reference fraud quite often.
Yes, so it's absolutely critical that this information be tracked and tracked well. It's not it takes some time, it takes some efforts, takes some things, understanding of what these costs are, but then you can track it in Excel, track it in your system, and then use like I say, a cost reimbursement system. What I suggest to people is you have gross payroll, you calculate your payroll costs for your 2-week payroll, you see the part that qualifies as payroll costs that can be forgiven, and at the end of the 2 weeks, you take that dollar amount out of your separate account for your PPP loan and you put it in your operating account. You've created a very clear trail of what your costs were and then how you reimburse yourself for those costs. It's going to make this whole forgiveness process much easier. The banks are going to appreciate it too. I can assure you that.
Quite a few of our clients have called and asked, so does that mean that I need to switch the account that I'm paying my payroll from to my PPP account? And the answer there is no. And that causes undue hardship for everyone. And it kind of muddies the water because some items are forgivable and some items aren't. Gross payroll is, but the employer's portion of FICA is not. So if you switch everything to that account, now we're muddying the waters even more. So what we really want you to do is keep the PPP loans separate, pay as you normally would, but then as you pay, reimburse your operating or your payroll or whatever account that you normally pay those expenses out of.
And that's something where we know a lot of the large payroll providers that we utilize as our back office are actually developing systems that we're testing and evaluating to help with those calculations. Correct. Because we still have some limits there on the payroll. We still have the limit that you can only reimburse gross payroll costs for salaries up to $100,000.
Correct.
So we've got those factors that we have to consider in that. And what we mean by that is $100,000 divided by 52 weeks. And so.
Right. So we've got $15,384.62 that is going to be forgiven for anybody that is an over $100,000 annual employee.
Right. And that's total. That's not.
That's total.
That's
total
for
the max
the 8-week
that you can give them and have forgiven. That's not to say that you can't pay them more. It's just the business's dollar that's going to pay them, not the government's dollar that's going to pay them.
Right.
And that $15,384.62 does not include employer paid benefits.
Right. Yeah. Those can be in addition to that.
Right.
So and the same thing on utilities. You're going to pay your utilities. You should have at least 2 months payments of utilities in there.
Right. So, and kind of what we've said is if you're a monthly employer, you're going to have 2 months of 2 pay periods for your payroll. If you're a semi-monthly or a bi-weekly employer, you're going to have 4. If you're a weekly employer, you're going to have 8. You should have 2 months worth of utilities and 2 months worth of rent or interest on your mortgage debt.
Yeah. And so on a payroll, Tammy, if someone has a program where employees can earn a bonus for certain things and you pay it during this 8-week period, is it a qualified payroll cost that you can include?
Yes, and the reason being is because we took payroll costs to calculate loans based on a 12-month period. Mm-hmm. So that 12-month period included any bonuses, any extra items that would have been paid if they got commissions for certain items. So you should continue to pay those. Right.
Yeah. And there's some questions there, but we keep talking about payment. There's been a couple of phrases that you'll read in the Acts talk about cost incurred or amounts paid. And we're talking about amounts paid because we know amounts paid is pretty clear. You spent that money, you're going to reimburse, use that money to be.
Right. And several people on here may have gotten the email I sent yesterday regarding incurred and paid. So that's what the language in the bill says, is that it's expenses that were incurred and paid during that 8-week period. They have not clarified as to what that means. So it could mean that those expenses had to be incurred during that period and paid during that period, which in my email yesterday said that that's an accounting nightmare. Yes. And I can't believe that they intended that when this bill was designed for small businesses. Because what that means is the day before my funding hit, I should have cut payroll off. And I should have run a short payroll probably for that time frame. Then I would run a short payroll for the rest of my pay period after I got funding. Then I would run normal payroll until close to the end. Then I would have another short pay period. That to me, for a small business,
I just got a headache when you said that.
Yeah, so that can be calculated, but it is not the easiest way to do that.
Yeah.
Therefore, what I am assuming at this point, until I get further guidance, is my payroll costs are going to be the payroll that was paid during that time frame. And as long as I am realistic with it, I don't think we're going to have a problem. The problem's going to come when people go, oh, well, but I paid January and February and March's rent in April after I got funded. Well, no, you should have only picked up 2 months.
Right.
So I think that as long as we're realistic, we can probably take it that it means that they had to either be incurred and or paid in that time frame. Right. But I would say that it's more paid than it is incurred.
Yes. So one other thing on rent, we were talking earlier, some of you out there may have building leases where you're paying common area maintenance cost. And those are in addition to, say, a base rent that you have. Right now, we believe that that's includable, but there's no clear guidance.
Right. There has been references to it, but there has been nothing stated specifically that that is included.
Right. Yes. And for some people who lease in facilities, that could be a significant cost.
Right.
Again, the utilities, the rent, the mortgages only represents 25% of what you need to spend this money on. So it could be that cumulatively it doesn't matter.
Right, but if I have a $300,000 or $400,000 loan, it may matter.
Right, it does. The size of your loan, it could be significant on that, and so that is something out there. And the thing on rent is that we talk about it had to be some kind of rent that was in place before February 15th, and a lot of you are like, well, I don't really have a formal written lease agreement, but you've been paying rent for the last 3 or 4 years.
So I should be able to look at your general ledger and look at your rent account and see these payments being paid on a particular time frame.
Right, and so that's where it really goes.
It can be a verbal lease.
It can be a verbal lease. It's just had to be something that you were doing and paying before February 15th.
Correct. And the other thing is for self-leasing. There was a question whether that was going to be included or not, and they have inferred that it is because that is a lease. And a lot of those are not written, although we would greatly encourage you to have a written lease in those situations. What we don't want you to do is to go, oh, well, but my rent has been being $600 a month. That's all I've been paying myself. But it should have been $1,500, so I'm going to bump it up for May and June. Don't do that.
Don't do that. That will not qualify for forgiveness. But yes, if you've had a lease in place, a lot of us do that. I mean, we own the buildings that we operate in, and that's very common with a lot of small businesses, and we typically have them in a separate, entity, and we pay a monthly rent. Some of us probably at some point created a lease, and it expires at some point, but it has a month-to-month component to it where you can continue that. That's perfectly fine from what they have said that self-leasing is going to be allowed. So that's a good thing because again, I think that's part of trying to help with the economy and such as that. So there are a couple things that deal with employees. When we all commit, when you submitted your loan application, you had to provide information on the number of employees you had at some period in time. And the big part of this whole program was retaining employees and continuing to pay employees. We know that businesses had to make decisions. They had to furlough employees, lay off employees, or make business decisions early on because you were getting affected. And ultimately, we want the businesses to survive. But there are some things that the PPP loans are affected by in terms of employment and continued employment and employee numbers.
Correct. So, and it's going to be based off of full-time equivalents, which they haven't said for this program exactly what a full-time equivalent is. So what we are basing it off of is IRS regulations at this point. And in the IRS regulations, a full-time equivalent is a 40-hour employee. So if I have 2 employees that work 20 hours apiece, that's 1 full-time equivalent.
Right. Yeah. And there's some guidance out there that we have from the frequently asked questions that we're able to go back and fall back on to help everyone with that. as well. But it's key. If you have if your workforce is reduced by 25%,
Correct.
or your compensation, you cut your employee compensation by 25% or more, then
For under $100,000 a year.
right, for under
employees.
then the amount of your forgiveness can be affected, but they hadn't told us how.
There are calculations out there, but they're very convoluted,
Oh,
and I
okay.
think that we're going to get further guidance on that,
Yeah,
because
right.
it doesn't really. I mean, if I walk through the steps, I'm like,
It makes no sense.
right?
Okay.
It doesn't make any sense.
Yeah.
Okay, so there's the reduced wages. Okay, but you can rehire your employees,
Mm-hmm.
and you have until June the 30th to reestablish that full-time equivalent rate.
Right. Yeah. And so that's a big component of why this program came out, was the federal government understood, hey, we had to lay off employees, we had to furlough employees. Here's a way to get them back, to get your workforce back, help you get through this time. And so they reward you if you've done that. If you've furloughed employees or you've laid off employees now, but you go ahead and hire them back before June 30th, it's going to help enhance the opportunity to maximize loan forgiveness.
Right. And one thing that I spent a better part of a half a day looking at was when they ran these calculations, they ran your loan amount based on a 2.5 month period.
Mm-hmm.
So that was annual cost divided by 12 multiplied by 2.5. When they're doing forgiveness, it's based on an 8-week period, and they're saying that 75% of your loan value has to be paid out in payroll cost. Well, I used 2.5 months times 75% is not 8 weeks times 75%. So we have a discrepancy between those two numbers. And if everything else remains the same, our discrepancy is 1.16%. You are going to have to pay 1.16% more in payroll cost than you calculated for your loan. And that's because they did the 75% based on days.
Right.
And we didn't calculate anything based on days. We calculated everything based on months and weeks. So that's why there's a discrepancy between those two.
And we're not sure they're ever going to figure that one out.
Right. So what my suggestion, and for anybody that didn't receive that, we'll put email addresses back up, and we can send out our little PDF that we did that has some calculations in it. But what I recommend in my calculations is, if you have no benefits to take up that slack, then pay a bonus that last week. Mm-hmm. The whole idea was to benefit employees. So for your rank and file employees, pay them a little extra. You probably paid them a bonus in 19 that got calculated into your payroll calculation for your loan. There was probably a Christmas bonus or something in mm-hmm. there. So pay them a bonus, give them a little bit extra to help them, since it's rough on everybody.
Yep.
If you have benefits, now's the time to be calculating that profit sharing portion and get with your TPA so that you can calculate that, and you can make a payment into your profit sharing program. That helps everybody in the long run. Maybe it doesn't put money in everybody's pockets, but it does help them. And you're going to make that calculation at the end of the year anyway.
Right. So
that helps you get forgiveness, and helps you out in the long run towards the year end anyway.
Yeah. So let's go one step further. So we have a business, and we've segregated our loan funds appropriately, and over time we've even reimbursed ourselves for our payroll costs, our lease costs, our utilities costs, and we get to the end of our 8-week period, and let's say we borrowed originally received $100,000 in loan funds, and at the end of the 8-week period, after we've reimbursed all that cost, we're in the last week of the 8-week period, and we have $7,000 left. We could do what you said.
What type of $7,000 do we have? Is it 75% or is it the 25%?
Right. Well, let's say it's on the 25% side.
Okay.
Let's say 75%. We met our 75% payroll costs, and all we have left is $7,000, and it would have been for those other costs. We could do two things. We could fund a profit sharing contribution or employee bonus, or because that 7,000 is not going to get forgiven. So the other option would be, if we've segregated our bank account, our funds and we have our bank account separately, we have that $7,000 sitting there. We can use it for some kind of employee bonus or profit sharing contribution, or we could just,
And then it would be forgiven.
and it would be forgiven, or we could just pay it back to the bank.
Correct.
And so if you have 7,000 you pay back to the bank, you have 93,000 forgiven, you're finished with the loan.
Correct.
So you have choices.
Correct.
Okay.
Now, if you had interest on other loans, I would not calculate those in there until I was at the end.
Right.
And then if I had money left over, then I could use that in my calculation for qualified expenses, not forgivable, but
Right.
qualified expenses. So I would have shifted that from whatever interest rate to a 1% interest rate.
Yeah, you could do that. The side of that then, so that if you do that, then that 7,000 is not forgiven,
Correct.
and
And I have
you'll have
2 years to pay it.
You'll have a repayment period, and the way we see it, you'll have 6 months before you have to make any payments on that.
Which is about the time frame that they're estimating to calculate forgiveness.
Right. So it's 6 months from the day you were funded until the first payment is due.
Correct.
On
Whatever
any
that
remaining
happens
loan.
to be.
Right. And then after that, you have 18 more months to pay the loan off.
Right.
And of course, then the bank is going to define how that amortization
Correct.
takes place.
And at this point, I think the email I got last night was that we have 4 different loans and we have 4 different calculations.
Yeah, and rightfully, I mean, at this point, there's not a lot of guidance for the financial institutions on how those have to be
Correct.
amortized and such as that. The whole hope is that most, if not all, of these loans are forgiven.
Or they turn around and take the money that's sitting in that account, pay 1% interest for 6 months or so, and pay it back.
And then pay the balance back.
Right.
And I think that way we are not stuck with some other kind of obligation.
Right.
And so, yeah.
Or stuck in a fraud situation.
Yes, absolutely. So I think that again is the key. So if you had to sum up this, Tammy, yes, I got to that before she did. If you had to sum up this and emphasize a couple of things for listeners, what would you like to share?
So first and foremost, and I think we've made it pretty clear, is to segregate those funds. By doing so, you've taken part of the headache out of your forgiveness calculation. Secondly, would be to go on and run that 25%, 75% calculation. At least then you know where you sit. And it's easy for most businesses to say, I've got 25%. If 25% is $25,000, I can back off 2 months rent and I can back off an average of 2 months utilities, and you kind of see where you're at. Payroll's a little more difficult, but that one should be easy. And then you know what else you have that possibly could need to be shifted to qualified payroll cost if you're looking for total forgiveness, which I think is what everybody's looking for.
Yeah, and that's where we can help.
Right. And if probably, especially where payroll costs are concerned, ask questions, get help. I think in the frequently asked questions, or maybe it was in one of the guidance issues that came out, they said that it's going to be imperative that if you have any decent size payroll, you're going to need help calculating this. Mm-hmm. So find somebody that knows something about it and ask them questions, or get their guidance on that. Yeah. The other thing is, I hope more guidance comes out between now and 8 weeks from now, preferably in the next 2 weeks and not the next 8 weeks. Right.
We really wanted to come out early because we don't want it to come out in week 7, and we should have made decisions in week 4.
The night before the first loan was funded.
Right.
That's when we'll get it.
That's when we got the first guidance about
right.
This pretty much the same way. I think we tried to cover a lot of stuff in a reasonably short period of time. We hope you guys, you listeners, took something out of this of value. We at Avizo Group wanted to bring this to you to find a way to provide you, our friends, our clients, some value that we think is going to be beneficial for you as we move through this 8 weeks. And of course, Avizo Group is here to assist and consult and advise for you and helping on these matters. I will emphasize, don't wait until week 7 to reach out to us. If you've already been funded, let's talk. and let's talk and see how we can assist you with this. Well, obviously, we do a number of payrolls for clients, and we have that information when we spend a lot of time trying to understand and kind of plan for where we believe Treasury is going to go with this. And anticipate that. The same thing, we can help you and look into your other costs that you incur over the next couple of months. And so we look forward to the chance to work with you and assist you in this process to hopefully get you to a point where your loan is forgiven, or we have the funds segregated so that you can make a choice to pay a bonus or some kind of profit sharing amount, or just pay the loan back, whatever the balance is on that loan, and that this benefited you all. We're all trying to get this through basically June 30th. We know this battle that we have to take care of our small businesses, take care of our sick, those that are at risk, is going to continue beyond that. But this is a means to try to help our economy be able to come out of this strong. A different economy, different business models from all of us. That will happen, but we're going to make it.
The last thing that I would say, and I know this from hearing conversations in businesses. So we talked about how bonuses are normally paid. Normally it's a Christmas bonus.
Right.
That's the common one. Communicate with your employees. Let them know that because you had funds available that enable you to get forgiveness, that you're going to pay partial bonuses now, and possibly in lieu of a Christmas bonus. But have that conversation. Don't just let them think that they're going to get something today and something later, and then be disappointed, because the economy may not recover by December. But if you've got funds sitting in that account that can be spent on your employees today to get forgiveness, which means it's not coming out of your pocket except for the 6.2% for FICA, you can help them out now and let them know that this is either in lieu of or partial bonus today, to help them out.
Yep, absolutely.
But as we all know, communication is the key there.
Yes, no doubt, no doubt. Well, with that, we want to thank you, Tammy. Thank you. And
we've got email addresses on the screen for Dennis and I. If you need anything from us, you can contact us there.
Right. Give us a call. Reach out to us on the web.
We also have a COVID-19@avizogroup.com email address, which is strictly for our COVID-19 group. So we have a team set up for that.
Right. And of course, our social media, if you've not seen us on LinkedIn or Facebook or Twitter, there's a lot of information that our wonderful producer, Carrie, is putting out there, along with the team that's giving us a lot of great information to try to keep you up to date. So,
and all that information is also on our website.
Right. So check us out. And thank you very much for listening in.